Street today. The Dow ended the day up 410 points. Nasdaq was also up 107. Paul Laudicina is chairman of the Global Business Policy Council and partner and chairman emeritus of A.T. Kearney, a global management consulting firm. You're an expert on economics. Paul, nice seeing you again.
Good to see you, Bruce.
What's on your mind as you read all these headlines, as you see what's going on? You've got a world perspective. Tell me what bothers you most.
Well, I think what bothers me most is there seems to be a transition that's going on in the global economy, and there is an extraordinary increase in volatility. And we're moving from an economy which was overstimulated, which needed to be stimulated during the recession, to an economy now that's on the verge of picking up inflation. The highest employment record that we have in 17 years. We have inflation indexes going up, like the Institute for Supply Management showing that raw materials are going up. So we have a tightening in the global economy at the same time that we just passed a $1.5 trillion tax cut. And now on top of that, of course, we have a $200 billion federal appropriation of the $1.5 trillion infrastructure investment. All of these things are going to cost us money, and they're going to put more fuel on an economy that's in the midst of transition.
I want to go back to that economy that you were talking about, coming out of a recession that needed stimulation. I take it those were the early Obama years. Seems like that would have been the time for a massive infrastructure bill. He talked about it, but
Absolutely.
we never got that.
Never got traction politically. And now we know that the American Society of Civil Engineers, that has continuously looked over the complete infrastructure of the U.S., has given us a D+. We're in bad need of infrastructure investments, ports, airports, roads, bridges. So the discussion that the administration initiated today is a good one, but the economics don't quite work yet, and we have to have Congress get into the mix to figure out how we're just going to get the kind of stimulus that we need to invest in the infrastructure that's important.
Congress getting into the mix. That's not going to be encouraging news to a lot of people, given the track record of the Congress of late. Let me ask you this about infrastructure. And the president has included in his plan parceling out a lot of federal properties, giving them over to the but selling to the private sector. He expects local government, local government to take over some of this. Does any or all of this make sense?
Well, I mean, some of it may make sense. There are a number of states that don't even permit it. There are 14 states in the U.S. that don't even permit private investment in some of these public sector activities. So there's going to have to be obviously some change in mindset, and it's not clear that there is, in fact, the private sector money that is available and interested in investing in those projects, even if it did make sense for those kinds of investments to take place.
Help us understand this. A lot of people out here are invested in the markets through their 401ks. They allow somebody else, to make the smart decisions or the not so smart decisions. What should people be concerned about right now?
Well, I think what they need to be concerned about right now is what their tolerance for risk is. What we saw today, for example, is obviously a 400-point increase in the Dow Jones Industrial Average. That was good, but it comes after the biggest price decline in 2 years that we saw last week. So we're going to see more of this volatility, and you as an investor need to understand what is your tolerance for risk. How long is your time horizon? If you have a longer time horizon, sit tight. If you have shorter time horizons, you might want to rethink whether or not you're in for this kind of volatile ride that's clearly ahead of us.
Try this. How is it that the market is so volatile and acting and behaving the way it is when everybody comes back and says, but the economy looks good? Okay?
The economy looks good. It's tight. So we're now worried about inflation, and we haven't been worried about inflation since 2007. When the market collapsed, obviously. So we're in a different position right now, and investors and the funds that are electronically traded are based upon these volatility index, this fear index. And so a lot of the tripwires are changing because our view of the economy and what we can tolerate is changing.
Right. You have written about, and you've always expressed some concern about most of the wealth being in the hands of so few.
Sure. The
disparity, not just in this country, but worldwide.
Yeah. Well, I mean, look, we just saw released by Oxfam a few weeks ago during the World Economic Forum meeting in Davos, this notion that the top 1% of the world's population now have controlled 82% of all the wealth that was generated last year. Or we know in the United States that the top 1/10 of 1% of those who have assets of $20 million or more now control more wealth than 90%, the bottom 90% of the American population. That kind of non-inclusive growth is not sustainable. And those are the kinds of issues that I think increasingly corporate America, corporate leaders worldwide are beginning to address, as we see some of the big fund leaders like the chairman of Vanguard and the chairman of BlackRock and some of the other funds beginning to focus on how do we not only deliver financial performance, but how do we also deliver investments that work to improve society's overall conditions.
Okay, it's important stuff. Paul, thanks a lot. I really appreciate it. I hope you took in on that. We're going to put the link out there and send it out to our people. That's good stuff. Really appreciate it.